Welcome to the Transparent FX Academy. I'm Nick and I'm a top podder on TradingView with over 190k reputation points. If you're new to the channel, make sure to subscribe. This is the place to go for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I want to speak about Euro USD because at the moment we do have quite interesting price action and structure. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect of this market, then we will move to the order flow, and by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, what we can see is that at the moment we are currently testing a very strong area of previous monthly support. In fact, from here, all this move to the upside was created, which the market broke to the downside, and at that point, all that previous support was turned resistance here. Now, as we're testing previous support and resistance, we could expect a potential rejection to the downside. However, at the same time, we can also notice how during all this move to the downside, one candle is not related to the move, and that candle is exactly this green candle here. In fact, this level was acting as previous support when the market rejected it to the upside, which now that the market has broken it once again to the upside, is again acting as support. So even though, as we have just seen, we have resistance here and we could expect some short-term bearish price action rejecting that resistance, here the market is supposed to find support and get rejected to the upside. So what we could expect, at least by looking at the monthly from a monthly perspective, is short-term bearish price action and then longer-term bullish continuation. Now, dropping down on the weekly, what do we have? From a weekly perspective, we can notice how this was previous weekly resistance, which the market has now broken to the upside. Now, as this area was acting as resistance and has been broken to the upside, this is now support. So the weekly time frame is aligning perfectly with what we have already seen on the monthly. We could expect a retest of this previous weekly resistance turn support before then seeing a potential rejection higher. Now, that is in fact exactly what has happened already twice. We had here the break above this previous weekly resistance turn support. The market retested it and rejected it to the upside, at that point creating a new level of previous weekly resistance turn support, which the market here tested and rejected to the upside. And at the moment we have a new level of previous weekly resistance turn support that, as we just said, we could expect the market to go and test before then potentially getting rejected to the upside, essentially for the creation and continuation of this uptrend, because an uptrend is a series of higher highs and higher lows in which ideally you would like to see the market every time go and retest the previous weekly resistance turn support. In this case, because the trend is from a weekly perspective. Now, dropping down on the daily, what do we see? Now, here on the daily time frame, we can see how the market had the impulse, correction, continuation higher. At the moment, the market is melting lower. Now, in a situation like this, if the market actually manages to create this move to the downside, at that point, we would have the creation of an M pattern. And in general, after the creation of an M pattern, what we could expect is a move to the upside for the completion of the M pattern at the neckline, which is the previous support turned resistance, which in this case would mean that if this M pattern would be created from a daily perspective, again, we have no idea if the market will actually make it, but if the market actually creates this M pattern at that point, we have good probabilities for a potential rejection to the upside and completion of the M pattern at the neckline. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, which are essentially hedge funds, and we check the data for the euro, what we can see is that with the last reports, net positions got increased. We went from 126k to 134k net positions, so an overall increase, so a move to the more bullish side of the euro from an institutional perspective. And if we look at the long term, we can actually see how the shift has been massive. We went from having a negative net positioning of minus 47k net positions with more shorts than longs on the institutional side of the market for Euro USD, all the way up now to having a positive net positioning, so more longs than shorts from an institutional perspective on Euro USD. Now, why do I say Euro USD even though we're checking the data just for the Euro? Now, you have to remember that all currencies on the spot are traded against the USD. So if you're checking the data for the Euro, you are actually already checking Euro USD. So moving back to the chart. From here, if the market will continue higher, is definitely possible, but we don't really have any good probabilities. However, if the market creates this move to the downside and prints this M pattern at that point, from here, we have the monthly and weekly support as well as the daily M pattern. So we would have good probabilities for a potential rejection higher. So if we get the creation of this M pattern, how we could be approaching this potential rejection higher. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries, at that point we could be looking for a potential rejection to the upside for the completion of this M pattern at the neckline. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, that is all part of the mentorship program, which you can find at transparentfxtrading.com. Here you have the possibility to gain access to my entire course with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software, which is the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll lower here, past the testimonials, you will see that at the moment I'm running a special promotion in which you have a huge upfront discount on the lifetime access price of the mentorship program from $497 all the way down to $97. And as an option, since I have partnered with the forex broker Blueberry Markets, if you open an account with them after you join the program, you can get a full refund from your student dashboard inside of your trading account, essentially credited into your trading account. And if you scroll over here, you will see that at the moment there is still time to join before the offer expires and the price goes back to normal. However, spots are limited, so if they get filled before the timer goes to zero, the offer will end anyway. So I really suggest that you join directly from here in order to gain automatically access with the email and password that you will create during the checkout process. So definitely looking forward to have you on board. If you enjoyed the video, make sure to smash that like button and comment below. It really does support the creation of more free analysis education and updates for all of you. And I will see you in my next breakdown.